Hi there, very good morning. Welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ashesha Adwaryu. This is a show where we'll take all your stock-specific queries with our experts, either on the back of fundamentals or on technical. So do keep sending your queries in and we'll have them answered on the show. But before that, before we get started, a quick look at how the markets are doing. Well, rather down. They are trading in the red across the board. 100 points of downtick over at Nifty, just managing to hold on to that 26,000 level. Sensex too, more than 300 points of decline on the Sensex. 85,390 is where the Sensex is at. Nifty Bank too, witnessing as much as a decline, nearly 0.5% of decline over there. 270 points of cuts on the Bank Nifty. 59,500 is where the Bank Nifty is at, just managing to hold on to that level. If we talk about the top losers, of course, it's Indigo yet again. That turbulence is not ending for Indigo, and it's down more than 6.5% right now, followed by BEL, Eternal, and Bajaj Finance. So yes, those are about the top losers on the Nifty. In fact, if we talk about some of the gainers, which are actually limiting the downside for Nifty, it's HDFC Life trading more than 1% higher, followed by Tech Mahindra, Wipro. So yes, IT Pack doing pretty well, Ashesha. So that's how the market is looking. Trading in the red across the board, but yes, IT seems to be doing better.
Well, yes, IT clearly is shining bright, and in fact, this has been the case for the last several trading sessions, isn't it? But let's get going then. This is a show where we answer all your stock-specific queries. Keep sending them to us on the phone number that is flashing for you at the top of your screens. And to answer all those queries today, on the technical side, we have Aditya Agarwal, Head of Research and Investments at Investor Edu, and on the fundamental side, Gaurang Shah, Senior Vice President, Geojit Investments, as always, is joining us. Gentlemen, thank you so much for taking your time out and joining us here on Buy Now, Sell Now. And the first question has come in from Mr. Venkata Ramani from Bangalore. And he has a question for you, Gaurang, on MRPL. He's holding about 1,500 shares and he bought considerable amount of quantity is what he's telling us. But now he's making losses on that investment. He's asking whether it is the right time to average out on his position. What will your view be on MRPL?
So thank you so much for having me on the show. Good morning to you and all the viewers of ET Now. A small disclosure before we go any further in stock specific, that all recommendations that I'll be sharing this morning on your show, these are part of our fundamental research team from a long-term point of view. Our company, Geojit or I, we do not have any personal investments, no financial interest, no conflict of interest. But we give recommendations to our clients of similar lines. Maybe they might have their investment interest. So a long time back, we had a coverage and we continue to maintain our coverage. Unfortunately, the acquisition price is at a higher level. The volatility in the crude oil prices has its impact on refiners like MRPL. Having said that, we have a hold recommendation. I think it would be prudent to possibly average at somewhere close to about 150 or below 150 levels to bring down the acquisition price and stay invested from a long-term point of view. This may take time, and refinery business generally is a long gestation period. Expect that the crude oil prices should translate into benefits for both refineries, oil exploration companies, and oil marketing companies. But prudent to average sub 150 levels from a long-term point of view to bring down the acquisition price.
All right, so that's about MRPL. But moving on to the next query, this one is coming from Chirag Thakkar, who has written to us from Hyderabad. Their query is on ICICI Bank. They want to know what's the short-term target that they should be looking at for this company. They're looking at a period of just about 5 days. They say that they shorted heavily on ICICI Bank, buying a put option of 1,300 rupees. They've already lost about 40,000 rupees due to the rate cut and spike in Nifty that we saw on Friday. So yes, they want to know what's the kind of target they should look at for a 5-day period, whether they should hold or book their losses. Aditya, let me come to you for this one.
Morning. Thanks for having the show. I didn't get they shorted put or they bought put?
Shorted heavily on put.
Sorry?
They have shorted.
They've shorted put. Okay, fine. So basically they're looking at an upside in the stock, and then I think that should be the right strategy, because overall stock looks like it's after consolidation should head higher from here on the upside for next 5 days. My sense is stock can test levels of of 1420 on the upside. On the downside, immediate supports are at 1380. So if you have shorted put, you're looking at a decay on the on the premiums. And my sense is if the stock doesn't fall from here on and heads to 1420, you should definitely see a decay in the put premiums going ahead. So you can stay put there. On the cash side, look at a stop loss at 1380 on the downside, and on the upside, closer to 1420, 1430, you can actually look to square off your positions on the puts that you have shorted.
Okay, so that's the technical view coming in on ICICI Bank. But the next question is also for you, Aditya. One of our viewers has a query on large cap IT stocks which are gaining momentum over the last 5 to 7 trading sessions. The likes of HCL Tech, TCS and Infosys. The viewer is asking whether it is a dead cat bounce or it is likely to continue going forward, and he wants your suggestion on either of those two, HCL Tech or TCS. Which one would you prefer?
Shisha, I don't think so. It's a dead cat bounce, honestly, because if it had to be a dead cat bounce, we are witnessing it for more than a week now, the kind of a rally in the IT stocks. And when chips are down, usually people don't look at these sectors, and usually those are the sectors which start to outperform. So for an IT as a sector, I don't think so. It's a dead cat bounce. It's a slow and steady up move. I don't think so. It's going to go up one way as well. It will continue to face some kind of a volatility, but overall, my sense is one should allocate some kind of an money to IT stocks, and especially large cap IT names, as he's also asking for, because mid cap IT stocks have already rallied a bit. So both HCL Tech and TCS look interesting to me. Between the two, I would prefer an HCL Tech because it's already started its up move, more cleaner chart structure on the front, and then for 1750 to 1800 is something that can be visible on HCL Technologies. And if he is looking at holding onto an IT stock for maybe a year or so, TCS can also be allocated some part of it. So both HCL Tech and TCS are looking interesting from a short-term time frame. HCL Technologies look slightly better off as compared to TCS.
All right, so a positive view both for HCL Tech and TCS, though HCL Tech looks better from a relatively short-term time horizon as well. That's the word coming on the IT space. But let's move on and get you another query answer. This is Mohit writing from Ludhiana. He has 500 shares of SAIL and he bought them at a price of 104 rupees. He's looking at a 3-year time horizon. Gaurang, let me come to you. What do you think? SAIL, good bet for a 3-year time horizon?
Well, we had coverage on SAIL some time back, and after the target price was in place, we have removed the coverage. So currently, we don't have a coverage. But let me give an insight on the entire metal, ferrous, non-ferrous. The domestic market looks extremely robust and buoyant in terms of demand for both the flat as well as long products. Second important thing is that the input cost or the raw material cost has come down significantly from what it was maybe last year or the year before that. Third is there is some positive news flows from China in terms of the economic revival that they are trying to do over there. And of course, the trade-related agreement between US and China. Having said that, we like both ferrous and non-ferrous. We have positive coverage on Tata Steel, JSW Steel, Hindalco, Vedanta, possibly NMDC, Nalco. My personal sense is that Tata Steel or JSW Steel are better companies for long-term investors.
Okay, so that's the view coming in on the entire ferrous and non-ferrous metal space. But we have Arun, who has written to us from Kerala. He wants a view on two stocks. One is Aarti Industries, which he bought at about 950 rupees per share. And the second is IEX, or Indian Energy Exchange. He has not mentioned whether he wants a short-term view or a medium to long-term view. Gaurang, let me ask you, what will your view be on both these counters, IEX, and the second one is Aarti Industries from the chemical space?
Erode to this extent, because when you end up eroding your capital to maybe about 40%, 50% or more, the task becomes much taller in terms of recovering your capital and then thinking about profits. Unfortunately, we don't have coverage on both Aarti as well as IEX. I won't give any specific comments over there, but my humble request to all your viewers of ET Now is that don't let your capital erode 40, 50, 60%, because then the recovery becomes very, very difficult.
All right, so that's the view on IEX. But with that, time now to slip into a very short break. We'll be right back with more questions to be answered on the other side.
Welcome back. You're still tuned into Buy Now, Sell Now. We'll start answering all your queries. But before we do that, Ankur is in conversation with SEBI chairperson Tuhin Kanta Pandey on the new validation agency and its role in fighting misleading financial claims. Let's go across and listen in.
I think we have to really do a massive investor awareness campaigns. And also we have to bring in new technological tools and new ways of engaging the investors so that the responsible investing, information, how to seek, how to invest, these will become the really buzzwords in our this thing, rather than just merely copying someone or go by someone's advice without research and without knowing. So I think we have to really upgrade the investors' awareness levels.
Right. You also mentioned that about the agencies. Now, will there be more agency? You think there will be more application on this? Or also on the pilot basis, now you're saying that this is launched. How soon we can see that SEBI will give directions that it is mandatory?
Well, this is not a pilot. It is a voluntary. At this sometime, it's basically an optional. Like if you want to advertise, then you got to be coming this way. Otherwise, you can't advertise. So we have given a solution at the same time. As the people will get more accustomed to this, they will more and more join, and they'll like to do that.
All right, so that's the latest word coming from the SEBI chairman. But time now to get back to all the queries then. And we still have Aditya and Gaurang with us to answer all of your queries. So let's get back. Now, this one is coming on GMR Airport and Samvardhana Madison. It's a short-term query. The viewer bought GMR Airport at a price of 109 rupees and Samvardhana at a price of 120. So, Aditya, let me come to you. What are the short-term targets that one should look at? What is the kind of chart structure that you're spotting?
So first look at GMR Airports because this is one stock which has done fairly well for itself in the recent times. It's just that past few trading sessions stock has seen a bit of a cool off and correction. But my sense is I won't read too much into it. It's just a minor cool off that we are witnessing in the stock. Still looks strong on the charts. So if the user has a medium to longer term time frame or maybe a 3-month time frame as well, he can continue to hold on to it for a target of 120 on the upside. On the downside, 100 is a good support area. Below that, 95 is a good support zone. So between 95 to 100 is a good support zone, and 120 can be seen on in the near term. Talking about Samvardhana Motherson, this is finally catching up with the rest of the auto ancillaries, and looks like should test levels of 125 to 130 on the upside. On the downside, 110 is a good strong support zone. You should definitely look at continue to hold on to Samvardhana Motherson at current levels, and for a target of 125, 130 on the upside.
Okay, so 125 to 130, that's the target price coming in on Samvardhana Motherson. But let's also put the spotlight on Capri Global. And we have Abhilash who has written to us. He's saying about 5,000 shares of Capri Global at 205 rupees per share. The stock currently trades at 186 odd levels. Gaurang, what will your view be? And he has lost quite a few amount of money in this investment. What will your view be?
I'll repeat what I said earlier, that we need to keep your capital limited to downside. You buy a stock at 250, 275 and you let it slip to 180, 185 and then ask questions. I think that's not going to work in stock market. We need to take a remedial step at appropriate time. Unfortunately, we don't have any coverage on Capri Global on the fundamental side, so I won't be able to give a buy, sell and hold. But one needs to understand and have a very clear-cut understanding of is that you need to protect your capital.
Right, so you must protect your capital. That's the word coming in, the word of caution from Gaurang. But moving on to the next query, Sanjay is writing from Noida. He has 400 shares of Moil at a price of 375 rupees. Should he buy more at the current level? He's looking to hold on to the stock for a period of about 6 months. Aditya, what do you think, Moil? What's the chart structure looking like for a period of 6 months or so?
There's no momentum stay as such in the stock, so I wouldn't be recommending to buy more. He can continue to hold on to it with stop loss at 310 on the downside. There could be a bit of a short covering rally, a minor pop-up to levels of 350, 360 on the upside. And then he could look at revisiting the stock once again around 350, 360 odd levels and see if the momentum continues, then might be you can hold on to it. Otherwise, I don't see too much of an upside in the stock just from current levels. There is no momentum. It's more of a consolidation and the time correction that we're witnessing in the stock as of now.
Okay, so time correction is what you're seeing in MOIL. We will not see upside is the technical view that is coming in on this counter. We have Murli, who is written to us from Andhra Pradesh. He's holding some 4,000 shares of Sagility India. He's asking whether he can hold on for a period of 1 year. Aditya, what will your technical view be on this counter?
I would recommend continue to hold on to it. The space is doing well. Stock has done well for itself. It's more of a consolidation that we're witnessing in the stock at current level. Since the viewer has a time horizon of 1 year and beyond, I would suggest hold on to it with a stop loss at 47 on the downside. On the upside, stock can easily test levels of 56 to about 60. As a disclosure, this is stock that we also have under our coverage and recommended to our clients. Could be in their portfolio, no personal holdings.
Okay, so that's the view on Sagility. But moving on, we have a viewer, Mr. Joshi, writing from Thiruvananthapuram. Their queries on Ajanta Pharma. They bought the stock at a price of 24.30. Gaurang, let me come to you first. What is the fundamental view? Do you think the company is good to hold on to in the pharma space, or would you like to recommend any other counter?
Well, so here again, we used to cover Ajanta Pharma, but post our target price in place, we have not continued with the coverage, but remain extremely positive on the entire pharma basket. Whether it is to do with large cap names or certain mid cap names, we have a positive view on certain companies. And our understanding is that despite of whatever tariff related, generic related announcement and clarification has come in from US. I think the global market remains extremely positive, including a huge opportunity in the domestic market. So Ajanta Pharma happens to be one of the stronger companies in the mid cap category, if you may. And my sense is that the combination that will do well over a longer period of time is the CDMO related companies. So remain positive on the entire pharma pack. I won't give specific on buy, sell, and hold on the Ajanta Pharma, but it happens to be a strong balance sheet.
All right, Ajanta Pharma happens to be a strong balance sheet, and CDMO plays are likely to do better in the pharma space. That's the view coming in. But Aditya, let me come to you for levels now. The viewer bought it at 24.30 and he's considering at a considerable profit right now. He wants to know whether he should add more at the current levels. What would you suggest?
Good question, actually, and a very smart viewer as well, because one should actually buy average at higher prices. So I would suggest, yes, he can his cost price and continue to hold. In the near term, I'm looking at a target of 3,400 on the upside, and once that is taken on, maybe a 3,600 can also be seen. So a good stock at higher levels, he should look to average, because then average buying price will always be lower than the current market price. And on the upside, can easily see levels of 3,400, 3,600 in the medium to slightly longer term time frame.
Okay, so 3,400 is the target price and you should look to average. That's the view coming in on Ajanta Pharma. But we have Narayan, who has written to us from Bangalore, and he's telling us that he's a regular viewer of ET and the show Buy Now Sell Now. Thank you so much. He's holding about 100 shares of HUL at an average price of 2,358 and 35 shares of Trent at about 5,117. He's asking for a 6-month view. Aditya, what will your technical view be on both HUL and Trent?
Let's talk about HUL first, Snehi. Unfortunately, the entire FMCG space, and especially this space, isn't doing much for itself. It's more of a consolidation that we're witnessing in the stock. Since he has a very short-term time horizon of 6 months, I don't see much of an up move in the stock. Could be more of a sideways consolidation. On the downside, 2,200 is the support. On the upside, 2,500, 2,600 is the resistance. So I don't see too much of an upside in the stock. Maybe you should move out of staples and look at something else within this FMCG space. Could be look at a consumer durables or something else, not staples FMCG just yet. Talking about Trent as well, again, there is lack of momentum. Stock has constantly seen lower lows, lower highs. And my sense is in the near term, stock is not going to bounce back anytime soon. Rather, if anything, after this sharp price correction, it will enter into a sideways consolidation, more of a time correction on the stock. So no upside on either stocks. If he has a very short term time frame, then maybe he should look to exit and buy again once both these stocks come in some kind of a momentum.
All right, so not much upside expected in HUL or Trent at this point in time. You could look at shifting to consumer durables, that's the word coming in, and you could buy at lower levels once again and exit for now. So that's the word coming in. But time now for a short break. We'll be right back with more of your queries to be answered on the other side.
Welcome back. I'm Harsh Sahita. With us is Rishi Gupta, Managing Director and CEO at Fino Payments Bank. This comes at a time, Rishi, when you've just received your small finance bank license. Talk to us about what this means, because this means you get to now start lending to the customers that have been customers for you for so long. So first off, many congratulations on this milestone, on this feat. But what next now? So you start lending. How quickly do you increase in terms of size?
Thank you, Harsh, and thank you all your viewers. And first of all, let me start with thanking the regulator, the gratitude in terms of giving us an opportunity to convert from a payments bank to a small finance bank, being the first payments bank amongst our many firsts, which is there. So what it offers to Fino is that as payments bank, we have set up this large distribution, technology, partnership ecosystem, a liability first approach, which we followed. From here, what we do is we have about 1.6 crore customers and about 20 lakh merchants in larger parts of the country. What we will do to start with is look at how we can convert some of our merchants onto lending platforms, some of our customers onto lending platform. Because we have the ability to raise a lot of liabilities as such, with about 2,600 crores of total liability deposits with us right now. We expect that this journey will further gain momentum, as some of the limitations of a payments bank in terms of the balances will also go away once we become an SEBI. So from a customer point of view, there's a lot of plus as such, because now, apart from holding an account of, they can also be a borrower of, for multiple products. So that is the first for the customers. From an employee point of view, it gains a lot of momentum and motivation for employee to also migrate, first migrating from a BC to a payments bank, now from a payments bank to a small finance bank per se. So from an employee point of view, there is a lot of plus. From an ecosystem point of view, I think a lot of demand was there on the ground also in terms of how the infrastructure which we have built, how we can leverage that. So our cost of doing business as a small finance bank will be much lower because of the ecosystem which we have already built. Our cost of deposits is right now about 2%. And in our scenario which we have built, we still continue to be about 350, 400 basis point lower than the peers in the market. So the ability to raise low-cost deposit, the ability to have a large distribution, to start with a plus on the merchant and the customer ecosystem, the technology, because we came from a technology mindset, and with now AI coming at the forefront, I think there's a lot of plus on the technology side as well. So I think this is the best opportune time for us to convert from a payments bank to a small finance bank. A lot of advantage to our customers. Our business model really strengthens now from being a transaction bank to an annuity lending kind of a bank over and above the transaction income. Harsh would also recognize that Fino moves with a 450, 500 crores of top line on transaction income. So that itself is a very differentiator compared to the others in the market. And we'll continue to push our transaction liability business as we build our small finance bank as well.
Absolutely, Rishi. So that's obviously the 30,000 feet view. Now let's get granular. What are the kind of cohorts you will lend to just to start off, maybe over the next 1 to 2 quarters? What are those segments that you're going to target? Of course, MSME will be one of them. But how do you expect that to play out? And what is the kind of margin you're expecting to make on the business? You already have a healthy CASA. So give us a sense on both of those parameters.
So from a customer cohort point of view, I think we would focus more on the secured lending per se. We will have a very aggressive approach in building up our liability business. But as far as lending is concerned, we'll go step by step and have a very cautious approach. We want to focus more on the secured side and then also some part of unsecured for our merchant and our ecosystem, but more on the secured products like affordable housing, LAP, gold loan, business loan per se, which is there. because of the cost of fund, which is there, the advantage which we have, we expect that we'll anywhere maybe between 8 to 10% NIM on our business, which is as good as an unsecured lending, but still will be good for our secured basis because of the cost of fund advantage which we have. And our geographies will be largely focusing. We'll start obviously the first phase of in the first 3 years post we become operational is to be on the north to west side of the country, and then we as we go to the south side, and then we'll cover the other territories of the country. We will have to build the business in a very in a right approach with the right mindset, and digitally technology is the main biggest thing I think which will benefit because of the AI and the other technology platforms which are there. So from north to west and then to south is the plan for us to look at from a geography point of view.
Rishi, I want to try and get a clarification. 8 to 10% margins, is that what you said? And what are your cost of funds? Therefore, give us a sense of that. And are you not seeing any competition in the areas that you are looking to grow in, especially lend in? Is there no competition there? 8-10% margin is unheard of.
See, Harsh, what is important is that start with a lot of advantage. And while we have been a payments bank for 7-8 years, we have been able to generate 30-35 lakh accounts, which were largely transactional accounts till now. And a very low cost deposit base of 2,600 crores at about 2% or so. We are able to generate 600-700 crores at the current rate and expect that the momentum will continue. So we expect that our deposit liability business 50 to 60% maybe will be at a price which is at about 2%, 2.5%. And the balance will be about 6 to 7%. So our average cost of deposit, which we are looking at, is about anywhere between 3 to 4% over the first 3-4 years of our operations. With that, at a lending rate of about 15-16%, we expect a good margin of minus the credit cost and everything else, a good 8 to 10% net margin, which we are expecting. Or at this stage, it will obviously be at a much higher cost of funds. So big distinct advantage for Fino is the ability to raise low cost deposit, I think, and ability to do it consistently over the last 5-6 years. And with SFB, I think this momentum is only going to strengthen further.
Rishi, what does this do to your ROA number? Give us a sense, because currently all the CASA that you're getting in, I understand, is parked largely in safe yielding assets, if I can call it that. That will likely move away and you will now start getting into loans, which is at 8-10%. So what does that do to your ROA mix? And what does your loan book look like maybe a year from now? Give us those two perspectives.
So from an ROA point of view, I don't have the number readily available with me, but you can expect that it will be a good, healthy number from the point of view that the cost of fund advantage which we have. We are looking at anywhere between 8 to 10,000 crores of lending book post 3 to 4 years of our operational as a lending institution. The idea is to build it very slowly in the first phase and then gradually ramp it up as we see momentum coming on that business. So ROA will be healthy. Our margins, as you can expect, is going to be favorable because of the ability. Right now, what we are getting is about 3.5% net margin. That 3.5% net margin becomes 8 to 10 margin as we convert into an SFB. Plus, there is some money which is lying with other banks, which is more than 2 lakh of deposit, which will also flow back into Fino as an SFB. So those advantages are also there, the liability advantage as well as the lending advantage. Over the above, the cross-sell advantage which will Fino get as an SFB is enormous. So from all in all, I would say that the potential of growth for Fino from a payments bank to SFB is very good. And I think it will change the entire dimension as such. And we want to follow a very differentiated approach. Don't want to be in the same kind of model which is there in the market.
Rishi, on your lending book, what's the kind of ROA anticipation? Is it going to be 3% plus? Because if it's a 8-9% net of credit cost, then what's the kind of ROA one can pencil in only on the lending business? If you can give us a sense there.
So you are right, it will be somewhere around 2.5 to 3% is what we are targeting specifically on the lending business alone.
Rishi, in fact, that's all the time we have. So we'll let you go on that note. Thank you so much for coming in and speaking with us. Always insightful. And many congratulations on the license.
Thank you, Harsh. Thank you very much.
Right. And with that, viewers, we'll slip into another short break. On the other side, we'll continue with taking stock queries.